Ladies and gentlemen, Kagan here with the Traders Club. Welcome to the market update. I hope you guys had a good week trading this week. Let's continue with our analysis here today. Let's start with the Spider, Q's, Diamond, IWM, and I've added Semiconductor for this week. So we'll talk about that as well. Let's start with the recent shenanigan move here. We had some gap down action. I think last week I tweeted out that 100 SMA potentially be potential resistance because that 100 SMA, and we talked about that last week, right? We talked about the 100 SMA did acted as strong resistance, really. I mean, bulls trying to get up, rejected, trying to get up, rejected, trying to get up, and tanked. So the 100 SMA coming down here, we got slightly above it for a day or two, brought it, came back down a little bit, and that was where the 200 SMA is hanging around in that vicinity. But it doesn't matter, 100, 200 in that vicinity, that's kind of what acted as resistance there. We actually kind of retested old resistance as a potentially new support there. You can see this is the downtrend resistance, and resistance, and we're kind of hanging around there. Really though, we got 20 MA, 50 MA. We talked about that last week as well. So we got this gap down, and so that gap down is going to make things a little bit hectic if bulls don't go up there and fill that gap as soon as possible. And here's a couple different scenarios. You know what we saw last time, right? We saw what we saw back in January 29th and January 30th, right? This thing gapped down. We saw this gap opening, and the next day it gapped up. I mean, there's a lot of gaps here. There are back-to-back, about 5 island reversals on the 65-minute chart. Remember we talked about that right here. Let's see. Let me remove that so you can see right there. Right, so we got that. Where's my box? We got that, and then we got this, and we had that, and then we had that. Just back-to-back. Gaps after gaps after gaps. But what really kept this thing going was that rising 50 MA on this 65-minute chart here. And you can see that has been acting as support. We slightly gotten below it. We're back above it. And we're obviously still in a minor-term uptrend there. So we kind of threw a little bit of double bottom there. We're trying to push up there. But let's go back to the daily chart. So we're kind of back here. This is pretty strong looking bullish candle. Unless we see another gap down here, something like that. But if we continue to see bullish move, I think bulls likely to fill that gap. And there's a few things could happen here. We may pause a little bit and then gap it up Monday or Tuesday, and then turn this into another island, right? And then make this into an island reversal and gap back up. And then continue to the next resistance, which is at 280 level. Got small gap there. So that's the best case scenario. That will be like the best if the bulls want to completely eradicate headache in the minor term, like that's what you want to see. You want to see this in gapping it up. Remember last time we saw gap up, and we did see, 2, 3, 4, 5, 6 days of bullish run. I mean, it was about a week of bullish move there. So we see a gap up. We're probably gonna get back up. We're gonna probably get up to about 280. Another scenario might be that we get up here, either fill this gap or like struggle to fill it, and we come back down, and the bear is gonna say, "Oh, look at this double top, man. There's a double top," and then we slightly like start to kind of deteriorate in a slow manner, right? Or slow manner or a little faster, but I'm thinking we may like kind of consolidate here a little bit, maybe potential retest 263. That is a possible scenario. Or we just keep grinding higher, and I'm kind of leaning towards the latter where it's gonna keep grinding higher. Maybe we get up here, fill this gap, maybe pull back a little bit, get up, pull back a little bit, get up, fill this gap, something like that. And something that's what I've been saying since like back in 240s. We get up, pull back, get up, slow consolidation, get up, pull back, get up. Remember I've been saying that. And we may continue to do continue to see this kind of a movement in the next several weeks here. So I think that gap is gonna be kind of important to kind of keep an eye on if you're really inclined to keep things in the short term. We do have a 50 and 20 rising back up here. So I'm almost crossing back up here. And last time when they crossed back up after this kind of decline, we did see something good happening here. We did see pullback, but eventually we did see this thing coming back up here. I mean, you just go back, you know, and you see this decline, and you see that 50 and the 20 crossing back up, and the bullish trend started in the minor to intermediate term, and that's kind of what we're seeing here, 50-20 retesting. And I actually didn't understand. I actually kind of surprised to see. I am completely like social media free, meaning like I don't go there and start reading things on social media what other traders are saying. And you guys know that I don't post any personal things. I don't even do that on Facebook. I'm completely social media free. I don't do social media. Trust me, you'll be more happy and you'll be more at peace when you don't do that, because social media, everybody out there, is fake. I'm telling you, it's fake. Think about it. People wanting to get approval from a stranger. People live for that. People live that likes and all that stuff. I don't do that. Only thing I do is Twitter, and I share my expertise, but that's about it. And I think that's a great thing about Twitter. You know what I mean? It's like you want to learn about fishing, then you go find somebody who likes to fish, and you follow that person. You like basketball, you follow that person, play basketball. You know, so I think it's a great platform. And this is one of the reasons why I love Twitter, the stock, and I've been heavily invested in it since the 1950s on Twitter. But I personally think that Twitter is going 100 in maybe several years. But anyway, but I had some time this week, and so I was kind of browsing through the social media and see what people are saying. Oh wow, people are still very much bearish. People are very, very much bearish. Either that or like very uncertain. Like there's a lot of uncertainty. Like they're scared. Like I don't know what's gonna happen. You know, like oh, because of this, because of the China deal, and you know all these different things people are talking about. And it just reminds me, like almost every time we see any steep decline. And same thing happened in 2016, right? 2016 probably was worse. 2016 definitely was worse. I don't know if it's worse now. I mean, I haven't been really tracking. Back then I was tracking more on social media things, but man, 2016 was bad. You go on YouTube, see was anybody bullish in early 2016. You will not find not a one video except mine. You will not find a one video who was bullish in early 2016. I think probably the same thing is true in early January of this year. You probably can't find any bullish video, and that's how I like it, because you know 2016, 2017 had a great year, and people say I was the only bull in early 2016, and 2017, 19, people were telling me that. I mean, this was when this thing was coming down like this. Somebody tweeted me, he's like, well, okay, officially you're like pretty much the only bull left. I'm like, great. I was the only bull in 2016, so I'm the only bull in 2019, right? And while everybody was exiting, I was buying, and market is up here. But I think it's going to continue. I think a lot of people didn't expect it for SPY to come all to the 270, just straight up without any kind of pullback, without any kind of double bottoms or retesting the lows, or any kind of consolidation, just going straight back up. And I think this kind of made a lot of people like really dumbfounded, right? Like they don't know what's going on, like what is this? And bears are just completely in shock, right? They were even up here at 270. This is how I like to see it, right? This will be like a headquarter, like bears headquarter, right? This is a bears headquarter, right? And this right here will be a command center. So half of the command center, right? Half of the command center is taken by the bulls. This right here is a battlefield, right? So the battlefield, that was a level where bulls or bears need to protect, is that 263, 265 level. I mean, it should have protected anywhere between 260 to 235. This was the battlefield. The bears need to bring it down. Now the bulls are up here in a command center, right? So bears have lost a lot of its rear estate. And once we get to about 285, that is a headquarter, bears headquarter. This is where bulls are going to completely knock out bears. But here, bulls have done a great job, came almost halfway to command center. I do think we're going to continue to higher. I think 280 is in the cards, but in the short term of things, need to take care of that gap. Either gap that up, make it into island reversal, or fill it and continue to rise higher. If we do see this thing coming back down to 265, 263, I think it's going to act as support and then go to the next leg higher. So that's kind of what I'm thinking. Still, I've been saying this for weeks now. Still, I don't believe we're going to come all the way down to 235 to retest a low. I think a lot of people might be still waiting for that. I don't believe that's going to happen. A lot of people still thinking that recession is going to come this year. That's not going to happen. Bear market is not going to start. I still believe, and this is something I said late last year, early this year, we're going to see a great year. 2019 is going to be huge, which I wrote a blog post about it. I believe 2019 is going to be huge. I'm forecasting year to date, currently year to date, 8% on the S&P. I think 20, 25, 30 is possible. Nasdaq can do 30, 35% this year. Maybe, just give or take a little bit, but I think it's going to be a huge year this year and next year. That doesn't mean market is going to go straight up. We're going to have this up and down. Sooner or later, we will get 5 to 6% decline. The question is, are we going to have a 5 to 6% decline around 280s? Right? Maybe do a little bit invert head and shoulders. We talked about the last couple of weeks. Or are we going to see 5 to 6% decline at 290 and 30s? Right? Because sooner or later we're going to get that. And I'm not sure exactly when. It could be 280, it could be 290, it could be 300. I'm not sure. But my hunch is we may not get that until 290, but we'll see. We'll continue to kind of track these levels, and we'll follow up each week here like we've been doing on Friday nights. Let's go to Nasdaq here. Nasdaq, this was obviously neckline here, and this is the falling resistance level. We broke above it. We retested 200 SMA, fall back a little bit. This tiny gap has been protected today. Okay, let me zoom in here. You can see here this gap is being protected. We saw some buyers coming in, brought it right back up. Looks like a bullish piercing candle with the Maru Bozu candle there. Bullish and piercing meaning gap down, pierce the 50% of previous day's candle body. So kind of a bullish piercing. Obviously, we need to see a follow through. We got this gap open a couple days ago, so that's so we got this gap acting as resistance there, and we got that gap. So we got those two gaps here, but bulls have opened some gaps here. We got this gap open, so we got a couple gaps, downside gaps, couple upside gaps. So a lot of battles happening. But again, bears have lost a lot of its rear estate, right? They have lost a lot of rear estate. And we, that has been clear. The neckline has been clear above it. We're at 171 already on the Qs. And so let's see if we can, make it good for the bulls, gap it up, maybe island reversal. But we got both gaps. I mean, there are a lot of gaps on the Qs. There's this gap here. There's a lot of tiny gaps. These tiny gaps are going to make things hectic for the bulls. Does not mean that bulls cannot bring it up. We may probably not going to see a big move on the Qs, and that's probably going to slow things down on the other indices as well. So what I think is going to happen is go up and then some shenanigan, go up, feel that gap, some shenanigan, and then go up and then feel that gap, and some shenanigan, and something like that, and continuing higher. We may see something like maybe 2-3% and then get back up or something like that. I think that's what's in the cards. The bulls are ready to fill all these gaps here in due time. I think it's going to happen in the next 2-3 months here. And once all those gaps gets filled, I think sooner or later we're probably going to see 5 to 6% decline. Why? Because a lot of cash people, a lot of bears were being scared. They probably want to jump back in once they think the uptrend might be starting again. And the bear or the market is not going to like that. So the market is going to come down, punish them, and give them some hard time a little bit, and then get up. So something like that could happen again. we'll continue to re-examine these levels every week, and we'll follow up next week on those. But for now, let's see if we can this coming week or next week, see if we can fill that gap and bring it back up. Dow Jones Industrial Average, there you go, is currently not able to break above this resistance. Other indices that we just covered, Spider and Qs, was able to, you know, clear above this downtrend resistance. Well, Dow is stuck on this downtrend resistance here, and this is a neckline, right? We broke above the neckline. We got these like gaps here. We're holding that gap. That's where we saw a little bit of buying event here this earlier today. The difference with the Dow though, yes, we have this downtrend resistance, but we're actually above these 200 SMA and 200 SMA, and we retested it today. So potentially that could be happening here, and that's a level where we have that gap, 248 in that vicinity. Let's actually put this there too, right? 248, 245, and we have a 20, 50 already crossed. This is the first time we're seeing 20 and 50 crossing to the upside. First time since they crossed the downside back in October 2018. When you see 20 and the 50 crossing to the upside, it means that minor to intermediate term trend is shifting to bullish now. So that's gonna potentially give some more confidence to the bulls here coming weeks here. Let's go to Russell 2000. Russell 2000 also did clear this level, retesting it today. That 100 SMA is quite heavy though. It's been coming down quite some time, and that's really what weighing it down. If I actually zoom out a little bit, that's the level of prior support, right? And then we broke above it. This was a recent resistance. We're retesting it, but that 100 SMA is coming down pretty heavily on the Russell 2000 there. However, we do have a 50 MA trying to get back up, 20 MA there. So let's see, there's some little short-term battle going on. Let's go to semiconductor and we'll call it a day. Semiconductor. So this is what I call a pivot, right? This is a horizontal pivot, meaning prior support is now, or it has became a resistance, now potentially a support. It's a pivot, right? And we, you know, let's put that box. Boxes are fun. Here, let's do that. So we can see here, let me, you know what, I'm gonna do this. So kind of see that this was a low, right? This was a low. And we poke his head up above this neckline. But here's the thing, even though we got right back in, when you look at things in a minor term, we're no longer in a downtrend in the minor term, right? In the intermediate term, yes. This is intermediate term, right? Lower highs, I see it, yes. Lower lows, I see it, yes. In the intermediate term, it is in a downtrend in the intermediate term. But in the minor term, we have to give credit for this higher high, right? That's a higher high, right? That's the first time, because remember, high, lower high, lower high, lower high, lower high, right? It was lower high, lower, and this is the first time we cultivated higher high. And if this thing pulls back to get up in higher high, then we can maybe continue, right? We got this downtrend resistance there. And so that's probably going to be the level. We're probably going to see some battling going on in that vicinity. But looks like we had some gap downs here, but we're holding this level. We've got that level. I think this is a level we're seeing some support. I think you want to see at least 96.55, at least at the worst case here, maybe 93.28 or so. You know, that 50 MA vicinity, this may come down. But there's a gap here. Yep, that's the gap. So that's a gap maybe bulls want to protect for the momentum to continue, right? So there's a tiny gap here too. There's a little gap right there. But currently we're holding this level, and that's a good sign after creating higher high there. So, well, that's for me for today. You guys have a wonderful weekend, and we'll look at these levels again next week. We'll follow up. You guys, good luck trading next week.